Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity market is likely to witness a firm start on the last trading day of the week and it's set to close higher for fifth consecutive week. Now, exit poll shows an BJP core voter base remaining in strong, at least in the Hindi heartland. But if you talk about another Q which is working well in the favor of the markets, it's the Q2 GDP growth data, which is coming at 7.6%, sharply above the forecast. And of course, global oil prices, that's where a bit of disappointment has crept in from. It's extended its overnight losses after dropping in more than 2%. Voluntary oil output cuts by OPEC producer for the first quarter next year fell short of market expectations. Let's talk about GIFT Nifty. That is indicating a firm start for Indian equity market. US markets overnight had closed in higher to close their best month this year. Now, just to give a little more reference and detail of how US market did, it was November's monster rally, which was powered by the optimism that Federal Reserve is done with hiking interest rates. On Thursday, stocks were buoyed by the release of the PCE index, that's the Fed's preferred inflation measure, which came in line with expectation, showing that inflation cooled to its lowest levels since 2021. Talk about Asian pairs. Well, Asian peers have started in at least the December month on a cautious note after recent strong gains. FIIs, they continue to buy shares. They've bought an equity to an extent of 8,147 crore, which is a big number. And DIIs have also, on the other hand, sold equities to an extent of 780 odd crore. Well, assembly election exit polls, at least most exit polls on Thursday predicted an edge to the Congress in Chhattisgarh and Telangana, while forecasting that it was an advantage for BJP in Madhya Pradesh and Rajasthan. So what does the poll of exit poll essentially indicate? 5 key highlights there. It possibly indicates it is a 2-2 drawn between Congress and BJP. In key Hindi heartland states, Telangana mean. What does this mean essentially for the politics? Summing up for you in 5 points. First, Brand Modi still is delivering even in state contest. Second is BJP's core voter base and last mile party machinery remains strong in Hindi heartland. And third, jury is still out on Mandal 2.0 and caste survey. That's the one. And of course, Congress Telangana search indicates an emergence of a different South India model. Women voters have changed the game pretty much for the politics, at least when it comes to the state assembly exit polls out there. But let's talk about FNOQs. FIIs have just been the net sellers in stock futures. They've been buyers in index futures. They've been buyers in index option, and that number is pretty high. Also buyers in Bank Nifty futures and also buyers in Bank Nifty options. Talk about FNO band. Right now, there is no stock which per se remains in the band. Seems to be the market breadth is pretty positive, but option Qs, the Nifty PCR data is at 1.26. versus 1.47. A ratio above 1 indicate that there are more puts building in as compared to calls. So that's a bit of negative sentiment coming in for the markets. But we're going to be talking about the trade setup strategies for the day in just a jiffy with Aamar. But first, we're going to be addressing in the market open just to see. We're a little shy of that all-time high level. I'll not be surprised that if we start on a positive note and witness some amount of profit booking through the course of the day, because it's typically when everything is, just picture perfect and positive, that's where some amount of caution needs to be exercised in for the markets. And this is exactly that point where Nifty is shy of that all-time high level. It's built into the gains. If today it gets to a positive start, it's going to be 4th consecutive positive start, at least for the week, and 5th weekly positive close, if we manage to muster in the gains that we've seen. But Nifty 50 right now, it is a good start coming in for the markets, just the way we anticipated, 20,200 mark. Well, that's where we're looking at. It is a good start, and also perhaps the record high levels, that figure perhaps needs to be checked in. But Bank Nifty, if you can pull that up just to see where the momentum is essentially coming in from. Bank Nifty, we're looking at gains to an extent of 0.1%. 44,515 mark. Well, way above that level at least. So it is a good start coming in for the markets. Well, it is a picture perfect market that we're looking at. Fourth consecutive day of rally coming in for the markets. Remains to be seen if some amount of profit booking perhaps creeps in to the markets like this. Mid-cap index also outperforming, just the trend how the way it always holds up. Well, small cap also 0.8% of gains coming in. Let's look at the sectoral indices which are doing well, especially the ones like Nifty IT and PSU Bank, and banking index of course is doing well, but Nifty IT also is doing well, 0.3% of gains coming in on this one. Let's actually also look at the top gainers and top losers and then navigate our conversation to Aamar Singh. NTPC, Apollo Hospital and Ultratech Cement, of course the Kesoram merger is working in the favor of the company. IndusInd Bank, Adani Ports and Asian Paints. We're going to be dwelling on that Ultratech Cement news in just a jiffy and talking about the enterprise value. It's perhaps the stock of the day that we have, but bunch of other cement names also need to be watched out for. Of course, it's going to play out in a big way in terms of the sector consolidation too. Let's talk about the top losers that we have. Well, Wipro, Bajaj Auto, where the downgrade is coming, and Titan. These are some of the top losers that we have. Apart from that, we're also looking at HDFC Bank, HCL Tech and HUL. These are some of the other top losers that we have right now. But let's go back to Aamar Singh, who's the Senior Vice President at Angelone. Hello there.
Yeah, very good morning.
Morning. What are you making out of the current levels? Do you expect some profit booking to now creep in, because we've seen significant amount of gains coming in for the markets? How do you look at it?
I would say that overall, there could be some profit booking happening at the current levels, because Nifty is almost very close to its all-time high. So that's one. But overall, the trend remains very strong, even from a short-term perspective, and the momentum is there quite strong. And if you look at the other data points in terms of advanced decline ratio, in terms of all-time highs, in terms of global cues, in terms of correction in crude oil prices. So these are all, and the most important, we had the GDP numbers also, which came out exceedingly well. And lastly, the FIIs have invested in a big way. So these are some very positive and strong triggers for the market. So that clearly tells that, and also what we are seeing is it's a broad-based rally across different sectors. So that's helping the markets, and we see that Nifty has made an all-time high. So that tells me that there could be, and shorts would also get trapped. That's also one thing, because they would be expecting that around the current levels there could be some profit booking, but that's not happening. So the shorts getting trapped makes it even more interesting in the markets.
All right. Also, can you let us know if someone was supposed to initiate the strategy, essentially, now that the viewers can look at? Would you, Nifty is at all-time high level, essentially. Do you expect, now viewers out, investors out there, traders out there to go out and further buy into this, or you would suggest them to exercise some amount of caution, wait out for the dips and then initiate a buy? What kind of strategy can we now adopt?
Yeah, see, the trend is clearly in favor of the bulls. So definitely, and on any dips, on any correction, one can look at a buying opportunity. As far as when the markets open, you have to let it settle for the first 15 minutes of the day. And looking back around, some decent level of support for Nifty would be around 20,180, 20,190. So a 20-30 point dip could be an opportunity for a short-term or intraday trading perspective. On the upside, sustaining above these levels definitely means that the markets are poised higher, and given the factors which are there, supporting Nifty is headed higher significantly.
Sure. The two stocks that I would want to chat about before addressing in the stocks and news, but of course, technicals first. Bajaj Auto, where there is a downgrade coming in from UBS. Talk about that. There is a sell rating which has been given by UBS, and of course, the rating earlier was neutral, and the target has been also slashed from prior 5,450 to now 5,600. But it goes on to talk about, the market is overtly confident about the electric three-wheeler market share and margins for this one. And, the brokerage actually sees an increased competition for this one, at least when Bajaj Auto, just in terms of that. But what's the levels that you're suggesting for this one right now?
So looking at Bajaj Auto, see Bajaj Auto from a long-term and a medium-term perspective remains extremely strong. And even from a short-term perspective, the trend is there. But one of the technical indicators, they point towards overheating in the market. So the support that Bajaj Auto would have on the downside is somewhere around 5,800, 5,850. That's going to act as a crucial zone of support for the stock, whereas resistance on the upside is somewhere around 6,150 and 6,200. So that's a zone of resistance for the stock. But the trend continues extremely strong. But as I said, one of the technical indicators points towards it being in overheated territory.
All right, talk about Ultratech Cement too, because a bit of consolidation that is taking place. Kesoram Industries, where they're going to be buying out Kesoram Industries Cement division. It's going to be an all stock deal, and of course we're going to be discussing that in greater details, at least when it comes to the fundamentals. But what about the technicals?
Yeah, I would say that Ultratech Cement, if you look at the stock, was consolidating, so it was unable to earlier breach the 8,900 level. So now that has been taken out, and yesterday also, if we look at the way the stock has moved, so that is also an extremely high volume. So if you look at the average volumes for the last maybe 50, 70 days, this is one of the highest volumes which we had yesterday. So the big question is that it needs to sustain above the 8,900 mark. Sustaining of that level, it's already trading at its record high. So sustaining above that level, the stock has a potential to rally towards 9,200 and 9,250, but one needs to be slightly cautious here.
All right, Aamar, we're just going to leave it at that. And thank you so much for taking out the time today to have a conversation with us. Indeed, a pleasure.
Thank you.
All right, let's actually navigate stocks and news quickly. Ultratech Cement, where of course the development suggests that the board has approved in the takeover of Kesoram Industries cement business in an all-stock deal, and the deal is expected to enhance in the footprint of Ultratech in western and southern markets in India. The transaction is expected to be completed within a span of nearly a year. 9 months to 12 months is what we're looking at. Kesoram Industry also put out a release saying that it's withdrawn in the scheme of demerger of Singh Industries, and it's going to be demerging in its cement business to unlock value, where Morgan Stanley has come out on reports and suggested it's maintained that overnight rating on the counter and the target of 9,300, suggesting that Ultratech's acquisition, of course, is incrementally positive, not just for the company, but for the industry as well. And the acquisition of Kesoram reduces the risk of excess organic supply, at least in the middle term. And it's also positive for the company given its increased footprint, of course, that we'll see in the southern markets, and it will also drive in economies of scale and potential operating synergies. The stock right now, Kesoram Industry along with Ultratech Cement at least is looking at gains to an extent of 0.5% out there. Flair Writing Industry, another one that you need to watch out for, where it's going to be debuting in on the exchanges today. The issue price has been fixed to an extent of 304 per share. That's the one that we also will be keeping a close eye out on. Thomas Cook, last one that we have on the list. Of course, we have also addressed in Bajaj Auto and the downgrade by UBS. That's the stock of the day. Thomas Cook, where Fairbridge Capital is going to be excising in now the green shoe option to an extent of 1.70%. We're seeing the stock right now trading down and out with losses of nearly 4%. So that's the long and short. It is a good day. We've seen record high levels for the market, but what's really next for the markets? Let's actually find the answer to that question in from Dhiraj, really, the Managing Director and CEO at HDFC Securities. Dhiraj, good morning.
Yeah, hi, good morning.
Well, it is a good start, indeed a great start to the day, perhaps at the record high that we are looking at for the markets, or rather scaled. What do you make out of the current situation where, exit polls seem to be favoring in the victory of BJP, at least in the key Hindi heartland states? FII actually now building up in the month of November. The numbers look rather encouraging. GDP data also supporting in the sentiment. What do you make out of it, and what do you expect the next leg of rally to look, to shape up by?
Good morning to you, and good morning to you, your all viewers. I think it's a momentous occasion that the Nifty has hit all-time high levels. So this is a great news for Indian markets and India and the all participants in the markets. I think when I look at in the morning, all news are looking favorable. The state elections, whatever outcome we are seeing in the exit poll is not surprising at all. GDP number that got released yesterday, 7.6% for Q2, was also an surprise on the upper side only. So from that point of view, I think it's good. And when we look at the all possible high frequency indicators also, like if you look at the air traffic on one of the Monday, where we had almost 5 lakh travelers, if you look at the credit card spend in October, 1.8 trillion. If we look at the SIP inflows, all-time high levels, almost 17,000 crore SIP inflows, and that to a 5% growth in 1 month alone, and also 7.3 crore live SIPs. We've also seen green shoots coming in from the FPI's participation in the market after 2 months of consecutive outflows of 14,000 and 25,000 in September and October. We've seen 9,000 odd crore inflows till 29th November. So all these things are looking really positive. Markets are looking good. We've seen euphoria, and we have seen a greater participation of retail and institutional investors even in the IPOs. And most of the IPOs have listed at a significant premium and have not disappointed the market. So, when I look at all these indicators, things are looking very, very positive. But it comes with the caveat that markets are in some pockets are at a higher valuation, at stretched valuations. So I would bring in here a word of caution for the investors, particularly retail investors who haven't ventured into the market for very long and are seeing a sudden growth in the market and are in their euphoria or exuberance, thinking that their market moves only in one direction. It never happens this way. Volatility is part and parcel of equity market. So I would humbly suggest all retail investors to navigate these times with utmost caution and look at only the quality counters, look at only quality companies, and do not leverage at this juncture. Some of the headwinds that I can see can come from the geopolitical issues, or when the crude prices, if they go haywire, if they touch $100 a barrel or so, that may create some kind of an turbulence in the market. And interest rates will remain high for some more time. We are not yet out of the woods. Inflation is quite stubborn, and a recession in US is almost imminent. Maybe hard landing, maybe soft landing, but that's where we are.
Well, point well taken, and also will concur with that. Dhiraj would also want to understand, we spoke about IPO valuation. Do you think it's the time when market needs to be a little more cautious now in terms of the frothy valuations? Usually, when you see these listings coming at a peak and that kind of premium, that's when, investors got to be more cautious than before. I mean, something like a Tata Technologies, sure, the parentage from Tata Group was high, and that led to, strong parentage support led to the kind of premium that we saw for Tata Technologies. But at this point of time, even for stocks like Tata Technologies, which are now sitting at a PE multiple of 80 times, perhaps higher than most of the IT stocks, do you think we can lend some amount of risk? Investors can now still look at IT counters and also Tata Technologies, to be specific.
So we do not have a coverage on Tata Technologies, so I will not be able to specifically comment on Tata Technologies. My generic comment on IPOs post-listing, where we've seen significant upside post-listing, I would suggest all the investor to exercise caution. Let the euphoria, let the exuberance settles. Let them evaluate 1 or 2 quarter results and see how things are progressing. Most of these companies are good companies, and that's why they have commanded this kind of a premium and this kind of an exuberance. But it is always good to look at their 1 or 2 quarter performance. Let them, after going public, declare their numbers, and that's when they can see whether it is a good fit for their portfolio or not. At the end of the day, we have so many companies that are listed in stock exchange, so customers and investors have to evaluate what fits in their bill. Coming back to the IT sector, I think IT companies that they are struggling both on new deals as well as on margins fronts also. We can see that even they have stopped hiring or they have limited their hiring also. As I mentioned few minutes back, that the recession is almost imminent in US, though still US is showing a lot of consumption is still positive in US, but it is after such a huge interest rate hike. We will see some kind of a recession coming in US, and which means that there will be a procrastination, postponement of the certain deals for IT sectors, and renegotiation of certain deals also. So IT sector, I think it is some time when investors can get into IT sector. They can still be more watchful. Let's wait for a 1 or 2 more quarter before we can take position in the IT sector.
All right, so that's also.
Having said that, few outliers and few good companies are always at a decent valuation, should be there and in the part of the portfolio. In India, IT has been one sector that has given in over a period of long term very good returns to their investors.
Sure. Any names that you'd want to talk about within the IT space? You've suggested some amount of caution for 2 quarters for Tata Tech too, but any names at this point of time which are glaring out?
So Infosys, Persistent, some of these companies have been our top pick, and that's something we have been recommending at various levels, and they have given good returns also to the market. Some at decent correction over a period of time. One can add some of these names also. My suggestion is that, for retail investors who know that some of these companies are great companies, they can follow a SIP route. They can do the SIP in the stocks also, as they are doing SIPs in the mutual funds also. So that way, that will be a great way to enter in some of these stocks, and they can navigate the volatility also very well.
So which are those stocks that you would suggest, apart from the few names that, of course, we could talk about?
See, more than stocks, I think what I can suggest that let's look at what are the multi-decadal themes for Indian market. Consumerism is one theme. Consumption has been a secular story for us in India, and with the per capita income increasing, with the affluence increasing, with the composition of the income increasing and changing fast, I believe that there is an opportunity in discretionary space. So entire hospitality space, whether they are hotels or aviation or travel companies, that space is looking very, very good. And those, in some cases, the valuations have stretched, but there are quality companies, and we are seeing great increase in the demand and consistent demand coming in. Some of these companies are also adding capacities to cater to the future demand also. So hospitality sector is one sector I feel that can add value to the customers. Also, though we are at all-time high levels in the Nifty, but financials haven't done much. So my take is that financials, customers can add more and more in the financials at this juncture, particularly well-managed large banks, both private sector as well as PSU banks. So that's one area which will do well, because the other than the consumerism and consumption, I think the investment theme will play out sooner than later. Last few years, we have witnessed that only largely government have been doing the capex, whereas we are seeing green shoot in the capex coming in from the private sectors. We did a detailed study to analyze the same. We are seeing significant green shoots coming in there. Whenever there is more capex, I think it's an upside for corporate banks, and we are also seeing buoyancy in the retail lending side as well. Only challenge for some of the banks is that how will they augment the liabilities, because there is a euphoria for capital markets and equity oriented products and other avenues to invest like real estate and so on. So that's where some challenges are there. But I think financials is particularly banks is a good space to be in. Other theme which we like very much is in and around the real estate theme. I'm not saying that straight away real estate companies. Some of the real estate companies are also good, but the proxy to real estate is like which are more related to the interiors like cables and more of the building material. I think that's one space which post-COVID we have seen is having significant interest. Many customers, many Indians are taking new homes, they are upgrading homes, they are renovating their homes, they're creating offices at home. So this is a structural trend, and here formalization theme is also playing out. 10 years ago, nobody knew which ply to buy, which cables to buy, but now we have brands, and people do ask with the names of brands like, I want to buy Polycap cables, or I want to buy Century E-ply. Of course, I'm not recommending these companies, but these are just symbolic to substantiate my point that this is how this space is emerging. And of course, last but the least, I think industrials. India is a deficit country in terms of infrastructure, and government have been doing a lot of job. There's huge capex that is lined up from the government also. Once the state elections and maybe general elections are over, irrespective of the outcome of the elections, I think whichever government will come, they will continue their thrust on the infrastructure space. And we are also seeing a lot of participation coming in from the private sector in this space as well. So industrials also in a mid to long term look a great bet for the investors.
Sure, Dhiraj, if you were putting out two names, hypothetically, if you were supposed to, in the run-up to elections, two probably banking names and infra names that one can look at?
So we have a buy rating on Axis Bank. I think Axis Bank, our institutional research have a buy rating on that, and close to 1200 as a price target. So we are currently we can see a good 15% upside from current levels. So that's one name I would say in the banking space. And on an infrastructure side, I think L&T is a unanimous choice for most of the research houses. So I would say these two names.
Would you also recommend doing SIPs in these two names, just as the market is now at the record high level? Are these the stocks essentially you think one can look at in terms of SIP, just the point that you were making earlier?
SIP can be done in more number of stocks also. I mentioned about few stocks in the IT as well. So SIP can be done in a few more stocks, not just couple of stocks. So one can create a portfolio of 8 to 10 quality companies and can create a basket and do the SIP in these stocks also. Also, ETFs are also great bet. Let me tell you, there is a possibility for investors to do even a daily SIPs also in ETFs. The biggest concern for most of the investor is that we are talking about markets at all-time high level. What if I invest at these levels and I can see a significant correction in the market? So I think every time the investors try to get into the market, they have to deal or navigate with this fear. My suggestion to all these investors who fret on the volatility is to do the SIP. If you're really paranoid about the timing in the market, then do daily SIP.
Okay, last question perhaps that I have for you in that case is the consolidation that is taking place in the cement industry. And of course, there were developments which suggested Ultratech taking over the cement division of Kesoram Industries in an all-stock deal. Of course, it's going to be also expanding in its presence in Western and South with this acquisition. But overall, how do you see the situation stacking up for the cement space, and what are your preferable bets within that space?
So I think this is a good acquisition for Ultratech because this will give them a more footprint in the South, and that way it's a good deal for them. As I mentioned, that the building material space, because there are more demand in the real estate space, both in commercial as well as on the residential side. To that extent, I think the cement sector will also have its own good demand. Some of it post-consolidation, I think pricing power will also shift with the few large players also. So that would be margin accretive for some of these companies. I would refrain from mentioning the stock specific here, but as a sector as a whole, I think it aligns with the our domestic economy facing theme that we are really sanguine about.
All right, gentlemen, I'm just going to leave it at that. And thank you for taking out the time to have this conversation. It was indeed insightful.
Thank you very much.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do tune in for more.